In this day and age, and let's not forget the economy, it's important not only to have a stable job and savings, as well as a few investments here and there. But with so many investment options, which ones should you focus on? Wonder no more, because for today's video, we're naming 3 investments everyone needs in their portfolio, along with other information you need to know about. So make sure you keep watching if you don't want to miss out on this crucial info. Without further ado, here are 3 unstoppable investments everyone needs in their portfolio. Investors are rediscovering the risk associated with investing as the stock market declines for a significant portion of 2022. Unfortunately, whether or not your money is invested, it is always susceptible to some kind of loss. To build an end-to-end portfolio that is more effective for you, it is crucial to put different portions of your money to work. Although risk cannot be completely eliminated, it can be managed in a way that increases your chances of success in general. You must prioritize risk management in your plan if you want to increase the overall resilience of your portfolio. The assets listed in today's video may not seem like much taken individually, but taken as a whole, these 3 options bring your overall portfolio one step closer to becoming unstoppable, even in this market. Starting with the first one, you need to have cash as part of your investments. It may seem unusual to think of money as unstoppable, especially at a time when inflation is raging. Despite this difficulty, cash has one significant benefit over other asset classes. You utilize it to pay your bills. Additionally, it serves as the standard by which other assets are judged. As a result, despite this year's terrible performance of cash when compared to inflation, it has outperformed stock market investing by a wide margin. Of all, if cash outperforms stocks over the long term, we all have much more important issues to consider. As a result, it's crucial to have some money on hand, but also to exercise restraint. A decent rule of thumb is to have enough money on hand to cover your monthly expenses, plus an additional 3 to 6 months worth of expenses saved up in case one of those horrible life happens occasions occurs. If you spend far more than that, you run the risk of having an excessive amount of your money exposed to inflation. Much less will put you in a greater danger of needing to sell your assets at a loss to pay an unforeseen expense. Now, aside from cash, another investment you need to add to your portfolio is high-quality bonds. Stocks might be a very risky location to put your money if you have bills that you need to pay in the next 5 to 7 years. After all, if the market declines as it did in 2022 and you rely on selling your stocks to pay your expenditures, you will need to sell an additional number of shares to satisfy your expenses. Bonds have many significant advantages versus equities when it comes to money you'll need soon. First, regular interest payments at predetermined dates, followed by a principal repayment at maturity, are characteristics of ordinary bonds. Bonds are therefore far more suited than equities for duration matching, which is the process of converting investment into cash immediately before you need it. Bond payments also take precedence over equity dividends. It usually results in bankruptcy and the possible transfer of the firm's assets to the bondholders if a corporation misses a bond payment due. Therefore, it is likely that a corporation will make its bond payments if it can do so. However, a company's capacity to pay its bonds depends on both the health of its balance sheet and its capacity to generate cash. So keep an eye out for such and stick with businesses that seem capable of making those payments going forward to increase the likelihood that your bond investments will be truly unstoppable. The main disadvantage of bonds is, of course, that they often have limited total returns due to their largely fixed cash flows and known duration. As a result, bonds are not frequently excellent long-term wealth-building vehicles, although they can frequently offer better yields than cash for those short-term needs. Moving on to the last one, the last component you need to add to your portfolio is broad-based stock index funds. Despite the obstacles we face in 2022, there are solid grounds for optimism that equities will remain an excellent means of long-term wealth accumulation. Broad-based, low-cost index funds that invest in stocks typically beat actively managed mutual funds over the long term. Because of this, broad-based stock index funds are a very effective long-term investment option. However, as 2022 serves as a reminder, the stock market might experience both gains and losses. Stocks are not the place you want to hold money that you need to spend soon, however how unstoppable they may be in the long run. Combining all 3 of these components is sure to give you a stronger portfolio. Cash, bonds, and stocks each have trade-offs and hazards that make them unsuitable as your only investment vehicle on their own. But when you combine them and consider when you'll need the money you're saving, they each become the cornerstones of a much more unstoppable portfolio. There is no better moment to start than right now if you're prepared to put the puzzle together for yourself. Set a deadline for when your end-to-end portfolio will have a higher chance of satisfying your needs. Make it a priority today. Now, since we're on the topic of investments, we might as well share with you these 3 stocks that could turn $10,000 into $50,000 by 2025. Don't believe us? Just keep on watching to know more. Every investor wants to see their assets produce multi-bagger returns. A stock that increases by 500% or 1,000% can not only make you wealthy, but one huge winner in your portfolio can also offset multiple losers. A good contender for a multi-bagger stock typically has a modest market value, trades at a discount, and is expanding swiftly. Watch out for 3 stocks that, if you have $10,000 to invest, might grow that sum into $50,000 in just a few short years. First on the list is an online auto parts disruptor. During the pandemic, CarParts.com's PRTS minus 3.78% stock improved. As DIY car owners took advantage of the extra free time to work on their vehicles, there was a surge in demand for auto components in the e-commerce channel, as well as increased interest in those parts. Since the peak in early 2021, the stock price of CarParts.com has declined by more than 70%. But CarParts.com's performance is still strong. When compared to the same period last year, the second quarter's revenue climbed by 12% to $176.2 million, outpacing several e-commerce businesses. Adjusted profits before interest, taxes, depreciation, and amortization (EBITDA) remained constant at $8.3 million, while net income nearly doubled to 7 cents per share. With a market worth of only $300 million, the business is reasonably priced for a growth stock because it trades at roughly 10 times run rate EBITDA or 20 times earnings. Next on the list is riding the digital optimization wave. Amplitude, AMPL, minus 2.71%, is one of many software as a service (SaaS) stocks that have been severely impacted by the market sell-off. When it cut its 2022 guidance earlier this year, the shares plunged by around 60% in one session. The business, which leads the developing software category of digital optimization software, which allows companies to use data to optimize their digital products, is still showing high growth numbers. Digital transformation is followed by digital optimization. Amplitude's tools assisted Burger King's Whopper Detour campaign, which provided Whoppers for a penny to customers near a McDonald's when they downloaded the app. Amplitude also helped Peloton Interactive upon realizing that social engagement was crucial to its success. Amplitude's second quarter revenue increased by 48% to $58.1 million, and its current remaining performance commitments increased by 46% to $170.2 million, demonstrating the continued strength of its backlog. According to generally accepted accounting principles, GAAP, the company is not profitable, but it reported a free cash flow profit of $8.3 million in the second quarter, thanks to an inflow of $10 million from an early renewal expansion it had planned for the third quarter. And finally, we have one that's the newest approach to lending through Upstart Holdings. A digital business called Upstart Holdings, UPST, minus 6.54%, matches borrowers and lenders using artificial intelligence, providing borrowers with higher acceptance rates and lenders with reduced loan losses. The company's sales rose by triple digits in 2021 as a result of this disruptive strategy, and the stock skyrocketed from its initial public offering price of $20 in December 2020 to over $400 at one point. Since then, though, Upstart stock has lost almost all of those gains as revenue growth stagnated due to anxiety about rising interest rates, and because Upstart's platform hasn't yet experienced a full credit cycle. Upstart faces a lot of uncertainty because its business model hasn't been tested in a downturn, and the internet company's most recent quarter saw revenue growth drop from triple digits to just 18%. But Upstart showed that it could still turn a profit in a strong economy by finishing 2021 with a GAAP net profit of $135 million on revenue of $849 million. With that, we're ending today's video about the 3 investments everyone needs in their portfolio. Hopefully, you learned a lot in today's video. What investments have you made recently, and how is it faring at the moment? Let us know in the comment section below. Before you go, don't forget to leave a like and subscribe to our channel with the notification bell on for more videos like these. We'll see you next time, and thanks for watching.